Welcome to the Authority Hub podcast. I'm Nolan, joined as always by Claire.
And today we're featuring the expertise of Sherry Corbitt, mortgage broker in Whitby, on.
If you've spent 30 years building equity in your Whitby home and you're now retired with a fixed income, what do you do when you need cash, but selling the home you love isn't something you're willing to do?
That tension is real, and it's one Sherry Corbitt hears about constantly from homeowners across Whitby and Durham region.
Let's set the scene properly, because this isn't a niche problem. It's actually incredibly common in markets like Whitby where home values have climbed significantly over the decades.
Think about a homeowner in their late 60s, owns their home outright or close to it. The property is worth well over $1 million, but their monthly income is a pension and owes.
They're equity-rich and cash flow constrained. That's the phrase Sherry Corbitt uses, and it describes a lot of people in this region perfectly.
A family member needs help with a down payment, or there are healthcare costs coming, or they just want to stop worrying about money every month. And they're sitting on all this value they can't touch without selling.
So they go to their bank, and here's where the system starts to fail them.
The conventional mortgage world is built around income qualification, T4s, employment letters, debt service ratios.
And if you're retired, you often don't have those things in the form lenders want to see.
A HELOC requires you to qualify based on income and debt ratios, and it comes with required monthly interest payments, which is exactly the kind of obligation someone on a fixed income is trying to avoid.
A conventional refinance has the same problem. You qualify based on income, and then you have a new monthly payment.
So the standard toolkit essentially says, you have $1 million in equity and we can't help you access it.
That's a structural failure, not a personal one, and it's exactly the gap that Sherry Corbitt's work in alternative mortgage solutions is designed to address.
Sherry Corbitt works with homeowners in Whitby and across Durham region specifically on situations like this, and the reverse mortgage is one of the most important tools in that conversation.
So let's actually explain what a reverse mortgage is, because there's a lot of noise around this product and some of it is just wrong.
At its core, a reverse mortgage is a loan secured against your home that lets you access a portion of your equity as tax-free cash, with no required monthly mortgage payments for as long as you live in the home.
That last part is the key distinction: no required monthly payments.
The loan balance grows over time as interest compounds, and it's repaid when you sell, move out permanently, or pass away, typically from the sale of the home.
And one of the first things Sherry Corbitt is clear about is what this product is not. It's not a government benefit, it's not a giveaway, and it's not a sign that something has gone wrong financially.
It's a federally regulated mortgage product in Canada, offered through specialized lenders, the most widely known being Home Equity Bank with the CHIP reverse mortgage, and Equitable Bank also has a product.
Now, who actually qualifies? Because this is where a lot of people are surprised.
To qualify, you must be at least 55 years old, the property must be your primary residence, and if there's a spouse or partner on title, both people need to meet that age requirement.
And here's the part that matters most for the client we described earlier: your credit score and your current income are not the primary qualifying criteria.
That's a fundamental difference from every other mortgage product, and it's exactly why this works for retirees who no longer have employment income.
The amount you can access depends on your age, the appraised value of your home, and the property's location, and generally, the older you are, the higher the percentage of your home's value you can access.
Sherry Corbitt points out that if you have an existing mortgage or HELOC, those balances need to be paid out at closing, often using the reverse mortgage proceeds themselves.
Which actually creates an interesting scenario. Some people pursue a reverse mortgage specifically to eliminate an existing monthly mortgage payment while also accessing additional equity.
You solve two problems at once. You get rid of the payment obligation and you free up cash.
Now let's talk about how the money can actually be received, because there's more flexibility here than most people realize.
You can take a lump sum at closing, set up scheduled advances over time, sometimes called an income plan, or do a combination of both.
And Sherry Corbitt makes a point of walking clients through the math on this, because the choice between a lump sum and scheduled advances has a real effect on the overall cost of the loan.
Because interest compounds on the outstanding balance, drawing funds gradually keeps that balance lower for longer. which can make a meaningful difference over a 10-year period.
That's the kind of side-by-side illustration Sherry Corbitt does with clients using actual numbers, not abstract concepts, but real scenarios based on your specific situation.
And the uses for the funds are completely unrestricted, supplementing retirement income, covering health care or home modification costs, helping an adult child with a down payment, paying off debt.
Now we have to talk about costs, because Sherry Corbitt is direct about this. The costs are real and understanding them is non-negotiable before moving forward.
The interest compounds over time, meaning interest is charged on the outstanding balance including previously accrued interest. That's the most significant financial consideration and the one that most directly affects what remains in the estate.
Beyond interest, there are upfront costs, a home appraisal fee, independent legal advice fees which are mandatory under Canadian regulatory requirements, and lender administration fees.
Some lenders also charge a prepayment penalty if the loan is repaid early, so if you sell the home sooner than expected, that's a factor to understand going in.
One structural protection that's built into these products from the major Canadian lenders is what's called a no negative equity guarantee.
Provided you meet the terms of the loan agreement, maintaining the home, keeping property taxes current, keeping home insurance active, the amount owed at repayment is capped at the home's fair market value at that time.
So you can't end up owing more than the home is worth, as long as you've held up your end of the agreement.
That's a meaningful structural protection, and it's one of the things that distinguishes a reverse mortgage from some other equity access strategies.
Let's clear up some of the misconceptions, because Sherry Corbitt sees these come up constantly and they prevent people from even having the conversation.
The biggest one is that the bank ends up owning your home. That's not how it works.
You retain full ownership of the property. The lender holds a mortgage against it, the same way a conventional mortgage works, but the title stays in your name.
Another one is that you can be forced out of your home, and as long as you're living there as your primary residence, maintaining it, and keeping taxes and insurance current, the lender cannot demand repayment.
And there's a belief that reverse mortgages are a last resort for people in financial trouble. Sherry Corbitt pushes back on that directly.
In practice, many people who explore this option have made a deliberate, proactive decision to access equity while they're healthy and want to enjoy retirement, not because they've run out of options.
Sherry Corbitt's point is that time is actually your friend here. Looking at this before you're in a difficult position gives you far more flexibility in how you structure it.
Now, how does a reverse mortgage actually compare to the alternatives? Because it's not the right answer for every situation, and Sherry Corbitt is clear about that.
The HELOC requires income qualification and monthly interest payments. For someone on a fixed retirement income, those payments are a real constraint, and the variable rate adds uncertainty.
A conventional refinance also requires income qualification and creates a new monthly payment. If the goal is to reduce monthly obligations, that option can work against you.
And selling the home solves the equity access problem entirely, but it also eliminates the home, and for many people in Whitby, that's not a financial calculation, it's a life decision.
A reverse mortgage is the only option that lets you access equity without a monthly payment obligation and without selling. That's its specific advantage.
And its specific trade-off is the compounding interest and the reduction in estate value over time. Neither the advantage nor the trade-off is hidden, they just need to be understood clearly.
Sherry Corbitt talks about a scenario where two homeowners in similar situations explore their options. One qualifies for HELOC and manages the payments comfortably. The other doesn't qualify at all and finds the reverse mortgage is the only product that actually works.
Both outcomes are valid. The right answer depends on the individual situation, not a general rule.
So what does the process actually look like from start to finish?
The first step is a conversation. No paperwork, just information gathering to assess whether the product fits and to get a general sense of what you might qualify for.
From there, if you decide to proceed, a formal application goes to the lender, an appraisal is ordered, and the lender reviews the file.
Once approval comes through, you receive a commitment letter outlining the terms, and before signing, you're required to get independent legal advice from a lawyer who is not representing the lender.
That's a mandatory step under Canadian regulatory requirements, and Sherry Corbitt encourages clients to take it seriously rather than treat it as a formality.
After legal advice is obtained and documents are signed, funding is arranged, existing mortgages or HELOCs are paid out at closing, and the remaining funds are disbursed according to the structure you've chosen.
Sherry Corbitt makes a point of walking clients through each stage in writing so they have a reference point, and then following up with a call to answer questions after they've had time to read through it.
That written summary to refer back to between conversations. That's the kind of practical guidance that makes a significant decision feel manageable.
And before you decide, there are things worth thinking through carefully: the long-term effect on the estate, your long-term housing plans, and whether a conversation with your family makes sense before you proceed.
Sherry Corbitt recommends getting a second opinion, not just from her, but from a financial planner who can look at the full retirement picture.
Her advice is always free, and she's genuinely there for that second opinion, but she's also clear that a reverse mortgage is a significant decision, and the more perspectives you have going in, the more confident you can feel about the one you ultimately make.
So back to that homeowner in Whitby, equity-rich, cash flow constrained, not willing to sell the home they've lived in for 30 years.
They connect with Sherry Corbitt, they work through the actual numbers, they understand the trade-offs clearly, and they make a fully informed decision.
Maybe the reverse mortgage is the right fit and they access equity without a single monthly payment. The family stays in the home, the cash flow pressure lifts, and retirement actually looks the way they imagined it.
Or maybe the conversation reveals that a different structure works better for their situation. Either way, they leave with clarity instead of confusion.
That's the real outcome Sherry Corbitt is delivering for clients across Whitby and Durham region. Not just a mortgage product, but a clear path through a decision that felt impossible before the conversation started.
If you're a homeowner in Whitby sitting on significant equity and wondering what your options actually are, that first conversation costs you nothing.
Sherry Corbitt is a mortgage broker in Whitby, specializing in reverse mortgage.